everyone. Welcome to another edition of Chart the Markets. It is Thursday, October 30th. We'll do a happy Halloween for all those that care to celebrate. Welcome back. We're here with our good friends from FEG Token and smartdefi.com. Of course, our exchange partner, BYDFi. And I would encourage you to run over to BYDFi.com and enter our affiliate code if you would be so kind, and that's available on our Blunhouse at Blunhouse TA on YouTube and of course on X. But without any further ado, because we have another day of more volatility, and these are the times that can really rock your boat. Let's be honest, right? There's things going on the chart that don't make sense to you. Price is volatile. It's moving up and down quickly. All the things that you were doing a month ago that seemed to work just no longer work at all, or you're just not getting the same return on those trades and you're having difficulties getting the wins you want. This is when having a structure and having a plan and being committed to it is really important. And it doesn't matter the style of trading that you use. There's lots of ways to trade. There's all kinds of different methodologies, and it doesn't matter to me which you want to use, as long as you're mitigating some risk and there's some structure around to what you're doing. But if you don't do that, you're going to find yourself feeling like the pinball in the pinball machine. You're going to be getting whipsawed all over the place, and it's going to be really difficult to try and make sense of what's going on, right? And if this is just our daily Bitcoin chart. This is the spot chart. It's not the chart that we were using that we've marked up, but this is the spot chart. And I'm using it because it's clean. As a trader, ultimately you want to buy those low areas, ride them up and take profits, and potentially short the retracements or those down trends. But if you don't have any structure around what you're doing, you're going to have difficulties finding the success that you want, or that you hope to find. We have to put context around the chart, and that context that we use, or those guardrails or ranges or zones, or however we're trapping price, will change sometimes based on how the market's behaving, because all of these massive, exuberant, parabolic up and down moves, for as much as they're opportunity, they're also tremendous risk. And the idea is to mitigate risk and try and maximize your profits. But when markets are jumping around like they are, it's really easy, and this is just a 15-minute Bitcoin chart, but it's really easy to see how you can get on the wrong side of something. And remember, we're showing a full view, right? Like, this is what we're looking at in real time, candle by candle as they unfold. They don't really tell us a lot without some sort of structure and context, right? And that's what we're trying to do here, is provide some structure for you to put on your charts, which gives you some context. And from there, you're able to just kind of overlay these tools that we use, which are accessible to anybody, right? But just by adding, let's just throw the script back on quickly. Just by doing this for me, it helps me make sense of what otherwise are just candles. But we have three pillars on how we base our trading. We use fibs, kind of showing us the retracements and extensions, showing us places that price historically gravitates to. We use fractals. We use different time frames, allowing us to see inside current candles, so that maybe we can see something forming before it actually takes place. And then the filters, right? And we use different ways to filter things. A T-line is one of them. Fisher transform is another. It uses a Gaussian channel to filter out noise. But just by using those three simple things, Fibonacci's, fractal analysis, and filtering out noise, you can accomplish a lot. Where we go wrong is we try and take on too much information that's complex and sometimes often new to us too soon. Like too much all at once. And I'm an example of doing that. That was part of my journey at one time. I wanted to learn everything from anybody that seemed credible to me, which I didn't think sounded reasonable. But what happened was I just polluted myself. Just so much information without any context, and it was just stuff at the end of the day. Just a lot of stuff. And what I'm trying to do is park the stuff and separate that from what you need to know to monetize the chart. That's what I'm really trying to do. And that's block out the noise. That stuff, a lot of it's just noise. Our job is quite simply to monetize the chart. That's always been my job. I've always looked at it as that's the job, monetize the chart. And I can monetize the chart to the upside, and then I can monetize the chart to the downside. Sounds simple. But what I lacked at the time was the structure and the methodology that I needed to execute that, right? And kind of what we're looking at is part of, is the outcome, I guess, the byproduct of just that, trying to maximize return and mitigate risk. And just monetize the chart up and down. And of course, doing that over various different time frames. Some of the trades you make will be weeks and months long. Some of the trades you make will be days and weeks, and others will be hours and days. And everything in between. So it had to work on all these different time frames. But I still needed to know, okay, I know what I want to do, but actually, how do I do it? And isn't that kind of how life is? Everyone says, this is what you need to do. Do this. Great, thanks very much. But how do I do that? Right? So that's what we're trying to do here. We're trying to show you how to do that. So the job is to monetize the chart. Okay? So I want to monetize the chart long. I'll just take the 4-hour Bitcoin chart. I'm going to let the market tell me all the stuff that I don't know, when to buy and when to sell. That's ultimately what we're doing here. That's probably the number one question you'll get asked as you talk to people that you do this more frequently is, hey, geez, when should I buy this or when should I sell that? That's the $64,000 question. My answer is, I don't know. Let the market tell me when, right? The market will talk to us and tell us what it's thinking and what it might want to do. And it will show us similar setups time and time again that seem to ring successful. But I just let the market tell me. So if I'm waiting to go long, when do I do that? Do I do it at this green candle? I don't know. Maybe. Maybe not. That's just a green candle. That's just a red candle. That's just another red candle. Now I've got this is what you go through every single day. There's all this kind of stuff. What do I do? Oh, I don't know. Oh. And you have no context of how to manage all this intraday or intra-week or whatever time frame you're working off of. You have no construct on how to manage it. Well, that's what we're trying to provide you with, right? Is a little bit of that. When you're trading below the T line, which is our filter, right, and the 5 EMA, when you trade below those levels, you know what? You should probably just stay short. when you start trading above those levels, you know what? Maybe it's time to go long. And how long do I stay long? Until the market tells us not to. Is all we do, and there's a reason why I wanted to show you this. How many times, raise your hands if you've been faked out by candles like these. Right? I'm raising mine right now because we all have. Hey, you know what? I'm in a good trade. Oh, I don't know. And then you start seeing these things and you're like, yeah, I'm probably going to get out. Right? That doji candle, if you were looking just at candlesticks alone, that's what it would tell you. You might want to exit there. That red candle would make you feel like you were right. But you weren't. This is the best part. I know this looks dead ass simple, but don't fight it. just go with it. Just go with it. Right? There's your buy signal. All you have to do is take that. And the worst case scenario is that you get stopped out. Trade didn't work out and you got stopped. That's the worst thing that can happen to you. Of course, if you're using a stop, which you should be. But what do we know? There's a buy signal. That divergence is starting to open up to the upside. I'm trading on the north side of the T-line and the 5 EMA. And as long as I have that divergence, you're okay. Let me take the candles off the chart. There's your entry candle that we just looked at. Does that look like a relatively calm move to the upside? It does. You can see that this divergence here is telling you that it's okay to stay in the trade. Still holding. There it breaks. Now, how many of you, when we look at this chart now, would have stayed in this trade without this as a means to track price and trend? Probably 0%. Because these red candles, they would have convinced you at some point in time to exit the trade. Or you would have hit your targets, which is fine. But the point I'm trying to make is all the candles do is make you think about stuff that probably don't need to be thinking about. This is what this is why I tell you, as long as this divergence is holding, you can stay long. As soon as I flip these candles on and you start having to analyze the chart one candle at a time, it can get scary, especially without this guidance. What you are missing now, and this is kind of how I was able to correct some of my own issues, was I'm looking at these candles going, okay, I can be the greatest candlestick reader in the world. But if I don't have any way to, sophisticated way or visual way to monitor trend and whether the trend is actually still intact, knowing its direction is pretty easy. I have eyes. But is it still intact? That's what I need to know. So that I can make the decision of whether or not to stay in these trades. And this is how I do it. Is by simply adding this tool. And it gives me buy and sell signals, and there's things working in the background that filter out things that would flash false signals as much as possible. But by understanding now that price is important, don't get me wrong, but you need to know if you're on the right side of the trade, A, and B, is the trend still in your favor? That makes managing all of these BS candles real easy. Red candle, stay in the trade though. Red candle, stay in the trade. Look at this big ass red candle. But what? The divergence to the upside is still there. So, yeah, we always know a little bit in advance, if using different time frames, when something's going to happen. This kind of stuff is, in this type of market, is worth its weight in gold. Just in the fact that you don't have to think about this crazy volatile market that we're in. Because it helps you filter out all the noise. It helps you determine whether or not this is just a green candle in an uptrend, right? Or is it a reversal candle? Some people would say, hey, you know what? I love these equal bottoms. I'm going to buy that candle. And for, a few hours, it works until it doesn't. But this is why knowing the direction of the trend and whether or not it's still in play is important, so that you don't necessarily make as many of these mistakes. And that's all we're trying to do. Give you an opportunity to make safe, profitable trades. And the only way that you get derailed 9 times out of 10 is because you're using too much leverage over too short a time frame. If you can't manage the volatility within a trend, then you're using too much leverage, right? So but the answers are always on your chart, in my opinion, because the market discounts everything. We're not going to find the answers in a space or anywhere else where there's just a lot of groupthink and anger. The answers are on your chart, because the market is communicating what it's doing. It's a real-time representation of what money is doing, not what people in those spaces and other things are saying. It's all about reality in real time. Like, I love talking about the big picture stuff, but even I can acknowledge it's all hypothetical. The reality is what's on the chart. Doesn't matter what the analyst says. The truth is on the chart. And you either believe that or you don't. And if you're going to be conflicted between the two, then you may have problems. Which do I believe? The chart or what someone's saying? I know my answer. My answer is always the chart. Because we can see over and over and over again price doing the same thing. Any time frame, any asset, it does the same stuff. What are we worried about here? That maybe this is either A, the start of a kick higher, right, which we don't have a buy signal yet. So what we're doing right now is paying the insurance to be on the right side of the trade. Right? So option 1, this is a breakout that's unconfirmed. If you buy this at this candle, there's risk to it. And what's the risk? Because option 2 is this is a failed breakout at the lower value range of the volume profile, which you should consider in this place to be resistance. And if it is a failed breakout, you're most likely to roll over and do what? Take out the previous wave's low. That's the downside. The other option is you go sideways, but I don't see that as much of an option. Right? But are we still acting under a sell signal? Yeah. We haven't had a buy signal yet. And this is why you wait to get the confirmation. And it's always the ones that you try and cheat that turn around and kick you in the teeth. So I've learned, just wait, right? Like, if you can't wait for a 15-minute, 5-minute chart, then, like, really, what are we doing? right? Like that doesn't require that much patience, does it? So this is one of the mechanisms that helps prevent us from making a mistake, which ultimately is a risk mitigation tool. So the script is giving us confirmation signals, yes, but ultimately it's because it's keeping you out of what could have been potential trouble. And that's why, you know, here these three candles could just simply be three green candles in what continues on to be the downtrend, right? That's the risk here of buying without the confirmation. Right? So, and you do this on every time frame. And that's how we catch runners, right? You're looking at one chart, you get some positive movement to the upside, then the next time frame up. A little while later, you get the same thing. Well, maybe that's momentum moving in the right direction and helps you determine whether or not you should enter that trade. Before we went on, someone asked about this useless thing because someone brought it up the other day. And it's kind of been, you know, fun to trade, and you can see why. But what's going on with it is the same thing that's going on with everything else. Obviously, that's your top. We won't even go there, but this is an example where we show all the time. So you have this big move down, and then all of a sudden, one of these big green candles shows up. And that's what we're looking at. And the next candle, boom, has that same kind of equal top. Pay attention to the divergence. As long as it's there, and the heavier it is, the more momentum there is to the downside. You know, a lot of people would say, hey, that's a great candle to enter, only to see this on the next candle. But if you're paying attention to that existing divergence that's, you know, under a sell signal, that's really important. Yeah, price is important, but it also can fake you out, right? Again, that's why if we take the candles off, it does add a little calm and clarity to the chart. It's as soon as you add the candles back in again, then you're like, what's, you know, panic. Do I panic? I don't know. What do I do? Well, just pay attention to the trend, right? And as long as you're not over leveraged, you're not going to have any issues. So we've obviously been in here before. I think we identified this level on a certain time frame, and you know, we're obviously coming back to it. So, but you know, yeah, green candles, but these green candles are just green candles in what is a downtrend. And so much of the market is fixated on going long all the time that, and I think this is what's happening to a lot of people right now that haven't had the experience of moves to the downside like this, is that, you know, you're programmed that every recovery happens quickly and it goes straight up. And what you're seeing is that's not necessarily the case. And in many instances, price is falling and hitting levels that you didn't think were even possible at one time. So there's a lot of that going on. And again, the moves are, there's Solana. You look today, like these are all big red candles. Everyone's going to talk about the 4% down day today on Solana. But how did you, could we have known that we were going to get this big move down? Like, how could we have protected ourselves or monetized to the downside sooner? I think you'll just find your answer on that shorter time frame. You know, there's the 4 hour. This is why we like it. Here's, you know, today's big move, but it started way up here. So if you're looking at, you know, being more let's say you were trading to the upside and this started looking a little toppy, and then you see the signal appear, you're gonna be like, yeah, I'm gonna take it off today. Or you could wait till today and do it. But this, again, helps put some context around what you're seeing on the chart. And this is just the ebb and flow of money in and money out. And when markets are volatile, that ebb and flow feels more extreme. But when we're looking at daily charts, because that's ultimately what we end up looking at, when did these moves start? Both to like, did this move to the left of the screen here? When did it really materialize down here? Could we have picked it up sooner on a 4-hour? Yeah. Same up top here. Could we have picked up this big move to the downside? Like at this point, this looks relatively harmless, that candle. But again, we don't know what comes after the current candle that we're looking at. Yeah, relatively harmless. Oh, that feels a little bit better. But then it just rolls over and dies. That's why we do this. You know, like our friend Rico said, if you were trading Bitcoin and is all you did was buy one time in 2023, if this chart has been nowhere but up and constantly bullish. So this divergence that we're talking about that determines trend, and you know, when you see the velocity go up like this, and of course it expands these ranges, that's money in. And when you have these sideways candles, or you know, would appear to be retracements, when they hold these levels, remember this is our filter, when it holds, it's telling you a lot. So if you bought down here, you've had your feet up on the desk for over like a year and a half, and is all you're doing is watching price move higher, right? And even when it showed us these pulling back moments, look where these closes are. They're either at the T line or above, telling us that, hey, we're good. The trend is okay, right? And yes, we live in a fractal world. So when we drop our time frames down, do we see the odd sell signal? Absolutely, right? That's going to happen when you condense your time frame. You're going to get a little noisier, and that's going to cause that to happen. But this is where weekly. But in fact, if you were trading the weekly chart and monitoring the monthly, you would have seen the weekly entry a month and a half prior even than when it appeared on our monthly chart. So in other words, here's where it appeared, and it would have actually appeared on our weekly somewhere in here. And yeah, that's a few $1,000s. It matters. But the takeaway, this is the benefit of fractal analysis. It allows you to get good entries on whatever time frames you're working off of. So if I'm looking at a monthly chart and I start, you know, to see something positive happening like this, what am I going to do? I'm going to actually go to my weekly chart so that I can see inside these candles and get an idea of what's going on. And that's how you would pick up that this entry here on the monthly would have showed up in here on the weekly. And then if you're just going to ride trend and you're watching that monthly chart like this, just watching the divergence spread out and price just keep going higher, and every retrace holds trend, well then you just hurry up and wait. And, you know, do I love this candle? No, but still diverged. So we're still in the trade. And that's all you would have had to do, is just buy, you know, that monthly candle or even a little bit sooner. And the monthly chart has been nowhere but up, holding trend the whole time. And this is why like fractals work for me. Because if you're paying attention to what goes on each and every single day, your brain becomes like a scrambled egg after a while, because all you're doing is processing information that may or may not work. I do have an issue here. Can you guys hear me okay?
There we go.
Okay. I don't know what
We were
happened.
good on YouTube, but it dropped out on Telegram. Thank you.
Oh, okay. Sorry, guys. Yeah, so if that's all you did, take the one signal, you might make 2 trades a year. Right? Fine. Make them worth it. Find a really oversold chart and buy a monthly signal. Like, that's basically what this is. And price just took off. But the point is, it's not rocket science. It's actually very easy to learn once you understand, the handful of rules. Useless is showing that today, Delatoshi. It's just having a big red day. And, people want to day trade this stuff, right? You wake up in the morning and you're looking for a long or short entry off a short time frame, which is fine. But are you trying to tell me that you couldn't find, let's just go to Bitcoin because we can, that you couldn't have found an entry on the 4-hour that just ended up running? Like up here. Or here. Like, yeah, you can wake up every day and trade each and every candle. But zoom out. Like, if you're trading with 20x over a short time frame, like some of you are going to be challenged. Just drop the lev down for me. Like, drop it to 10 or 5, I don't care. But work off a longer time frame. Take the 4-hour signal, nice big run up, a little bit of sideways action, and then you get your signal. Take that, and instead of using the higher lev over the shorter time frames, try and use the less over a longer time frame, and allow yourself to stay in the trade longer. And you're going to find that by 9 times out of 10, or more times than not, I shouldn't say 9 times out of 10, but sorry about whatever technical stuff is going on, but hopefully you can hear me now. Let me know, Delatoshi, if you can or can't. Are you good?
We
You
can hear
can
you on
Okay.
Telegram now.
There we go. I don't know what's going on, but my system keeps clicking in and out. So, anyways, I think you get the point. Now, let's look at XRP for one moment, because it gets a ton of attention, right? So, what are we doing? Right? The same thing that everything else is doing. We read the chart the same way. It doesn't matter what it is. This is an obvious pullback. We don't have a signal on the daily yet, but am I going to eat 4 red candles? Probably not. Or at least I don't want to. But how can I see what is really going on? Well, I'm just going to, again, drop the time frame down. Nice big run up higher. Obviously a very organized move to the upside. Then we start getting a little bit choppy in here. And this ultimately is the move that starts to take it lower. Are there a couple signals in between there? Yep, and that's going to happen, especially when you're consolidating. But when it breaks out or breaks down, it's usually a significant move. So we don't have to wait to eat 4 red candles. As soon as it starts to look sketchy, start to peel back the onion. You know, when you start seeing this, you're like, I wonder what's going on here. Then you drop down to that other time frame, and you're kind of realizing what's going on here is that it's already started. And if we use fibs, back this up, let's draw some fibs. I hate these big wicks, but got to use them. So, so here, obviously, this would start. You know, you'd be able to identify that as a top. So you can put your fibs there, and you're automatically going to be looking at, you know, one of two places, probably 50% or 618 as a target, potentially. Where do we end up? Yikes. So we broke 618. What's your takeaway when that happens? That maybe there's more to the move to the downside than we would like, right? You know, 50%, you're okay with that. 618, still okay with that. But when you start to break that 618 level, like, do you want to round trip this whole wave? Not really. But this is how we use our fibs, because it helps us create some targets. Because you have to set targets. You can't just keep trades open forever. Yeah, and sometimes you're going to check yourself out of a trade when you hit a target, and price may continue on, and that's life. We don't care. We just kind of stick to our knitting, obey the rules, take our profit, and move on. Yeah, it sounds kind of mechanical, but that's okay. That's the way it should be. Less emotion is better. This methodology takes out a lot of the emotion. And the emotion just isn't like the highs and lows of successful and unsuccessful trades, right? It's the thinking that goes into making all of that stuff too, right? So we're just trying to make it a little bit easier. That's all we're trying to do, so that the job becomes less intimidating and less overwhelming. You know, and I say that when like everything is red and a lot of it's double digits, right? Like, how is it not make you anxious? But it is what it is. When you understand where price has been, knowing that it will likely return to those places, it makes all of this, again, less intimidating, less anxious, and will help keep you sane. Here's ETH. It's looking very much the same as everything else. And it's a process of current price revisiting past price. So when you're trading, whenever I'm trading above all three, the 20, the 50, and the 200, I'm always aware that prices at some point is going to come back and tag the 20. And that's completely normal. But ultimately, it will fail the 20. And when it fails, it will look for the next level down, which is the 50. And a lot of times you just get continuations, like really like this is, right? Continuation. And that's great. And then other times they fail. So when you're trading above these three, know that at some point you're going to come back and check some very acceptable levels, which is fine. And quite often you get bounces that move higher, take out the previous wave's high, like you see here. And then other times they fail. Here's a lower high. And you fail the 20 and the 50 all at once. Right? Well, there's your sell signal. Basically, you know, essentially a top. And we just do what we're told. There's your buy signal. You're challenging. Fail. No, we didn't take it. So what you were looking for here is you would like to see this take out this previous wave's high, which it doesn't do. Rolls over. You know, anytime you fail the 50 and stuff like that, I don't like it. And first attempt fails. First attempt after breaking the 20 fails. Second attempt at the 20 was successful, but the first attempt at the 50 was a failure, right? And when you reject here, so when you're automatically going to look for the next level down, which is the 20, which you hit. The following candle, you fail it. What are you looking for? What's a draw for price? The 200 MA and this upper value range. Now time, as in the moving average and price, will eventually come together. My guess is somewhere in and around this area, because those two elements are a draw for price. We have to start looking at what the downside risk is from there. What happens if you break that upper value range and fall into this gap? And this is a nasty gap, right? Like this is the kind of, there's nothing here. There's no volume here at all. Which means that when you come back and start to retrace, there's nothing there to hold price up. That would maybe make it a more organized move down. Chances are, when you see these gaps, it comes with a velocity. And we're being shown this big gap right here on the daily. How did it get born? Back here. Right? So if you look to the left and you see this big move up, as fun as, just remember this. When you see these moves, and you're like, oh, this is awesome. I was on the right side of it. Great. Had a good, essentially turns out to be a good month there. Know one thing, that this parabolic move up created a gap somewhere. See how it fanned out your 20 and your 50 like that as it went higher? Understand that you've created a gap, and that at one point in time, you're going to come back and that big volume gap is going to exist. And here it is. You can see where your upper value range is formed at the bottom of these candles, and then all of this created this gap. And it's a gap in volume, not necessarily in price. It's a gap in volume. These candles went nowhere but up, but think of them filled with fairy dust and air. And then when you try and set price down on top of them in a retrace, what does fairy dust and air hold? Not much. And then the weight of price coming down, that's why you blow through these gaps, both up and down. So keep an eye on this gap. So a test of the 200, this would be the first test, so you would hope that you would get some support, at least for a while. But if you break it and fall into this gap, you have to be aware of the downside risk, and then you start looking like this is the point of control at 2,500. That sounds outrageous, but that's the downside risk, at least technically. If we were to say at 4,000 that you were coming back to, 3,500, 3,400, people would thought you were crazy. Right? Well, you're not all that far away. And keep an eye on the shorter time frames so that you don't get hit by something you didn't see coming. Because that's where you'll start to see the activity on that 4 hour in all likelihood, unless it's one big massive spike. But that's the downside risk. And if you're not using the volume profile, like, what are you looking at? Right? Just looking at this. Knowing that there's this gap there, and after a while you're going to be able to identify it without even having it on your chart. But I mean, knowing that this creates this big gap in here is really helpful. Like, Even you're looking at the current candle, you can see the range, right? You know where the point of control is. Look, it's all this past price that's averaged out, right? All this is volume in here that's creating this. Anything above the point of control or below typically has gaps associated to them, right? And they do. So this is a draw for price. So I'm expecting it to weaken a little bit further. Kind of structural in here, so it has to, if it breaks that 37.37 number, it might get a little heavy. And as all that's happening is current price is looking for past price. We talk about it every week. Here's a rejection at the 50, first touch. You would anticipate that. A lot of people that work with us would have shorts in here. Tag it, price drops. Then we get our confirmation, right? So that's the safe entry down. But the way I trade, you'll see orders at major moving averages. Nevertheless, price is faded and it's just looking for the next level down, whether we like it or not. The bottom line is, when you're trading on the south side of these levels, you don't want to be long, right? This is a downtrend. You don't want to be long. You can hope and pray and do a dance of some sort if that's your thing, but it's not going to change reality. The reality is, you trade on below these levels, you should be short or get out of the way. And you can start to see, like on the 4 hour, this is a serious move, right? Why do we do fractal analysis? So that we can see, because we understand that this 4 hour chart, failing the 200 is just as relevant as failing the 200 anywhere else, right? We broke one level at resistance and we found the next. We fail it and we find the next. This is, remember on the other chart we showed, why do you wait for those confirmations? Well, hey, this looks like a breakout. No, it's not. It's actually a failed breakout that took out the previous wave's low, right? But we know this because we have this as a guide. Where do we come back to? Lower value range. Right? Talk about creating ranges for ourselves to trade in. This is what I love about the volume profile. And things like ETH and Bitcoin or Solana, where you have volume and you have some price history, will often frame up, yes, you're going to have some extremes, but it often frames up the highs and lows quite nicely. And it allows you to apply the methodology that we have within a range. Right? So we've trapped price within a range. Hey, would you short it up here? Or even, at this resistance as it starts to fade in here? Probably. But even if you waited for the confirmation, just breaking level by level by level, you don't have to think about this stuff anymore, right? You could try and long those candles, take it as a bounce off the 50, but it failed, right? This is why you wait for that confirmation, because you don't want to be faced with this, right? The rollover. Here's another example right in here. Look, yeah, green candles, yay. Big wick up, right? So a lot of people are going to try and chase that, only to get what? Rejected again. Right? This downtrend was still intact. These are just green candles. These are just slight retracements higher in a further downtrend. These are just gassing up opportunities for the next wave down. And, this 4 hour candle is getting really heavy. It's breaking that lower range and falling into an even worse gap. So you want to make sure you get some support at this level. Minus this wick here, we'll take that out of the equation, but you want to make sure you don't go much less than 37. Right? What did we say? 37, something like that. But just do what you're told. The market doesn't care that you want something to go up or down. It's going to do what it's going to do. Your job is just to get on the right side of it. And if you are, you'll never have to have an argument with yourself. Because that ends up with that. That's ultimately what happens, right? Let's look at Zcash. This thing has gone obviously nowhere but up. Like, this is nutty. Like, you gotta love this, right? Like, isn't this a technician's dream? Just to eat all this up. No one even knows you're doing it. And then bam. Price just shoots up. And this is what you love about this kind of consolidation. So much time to get in. If you really believe in something that, you know, ultimately it's going to have its day, and that's all a gamble, right? But this long drawn out consolidation, we know what comes out of it. Either a parabolic move up or death, right? And, you know, more often than not, it's a nice move higher. And yes, you had a signal and everything, but this was visually obvious to see that things were starting to happen. And what's going on? Not unlike our monthly Bitcoin chart, right? That just went straight up, and any retracement wasn't strong enough to break trend, and price just continues to move higher. In fact, you haven't even touched the 20 yet. So if Zcash was to retrace, you know, from here, what's it got to do? Now it's got to break the T line, start trading below it, and then you can see the 20 and the upper value range in here. Well, that would be a target. But just because you hit that target doesn't mean that price continues to fall. This could be one of those examples where, you know, price comes up, it starts to fade a little bit, hits the 20, and then gets a continuation. And then when price gets to these two equal tops, people are saying, oh, it's double topping, it's double topping. Well, was this a double top? Was that a double top? No. Those are just basically two equal levels of price that look double top-ish, but it's not a double top. So if you shorted this, you were wrong. Not everything that looks like a double top is a double top. So what mistake would you have made here? What would you not have been paying attention to? If you're using our system, you would have been watching this divergence hold. Yeah, these are retracement candles. These are just, you know, 4 or 5 red candles that didn't break trend. So that's crazy. But you could have made a real bad mistake there, because a lot of people are saying that's a double top, that's a double top, that's a double top, because that's what they're looking at. But when we flick our script back on, we're going, no, that's not a double top. That's still an uptrend to me. And you'd be right. So you'd end up getting stopped out of that trade. This is why having the ability to have a determination for trend while you're in the trade is invaluable. This keeps me from making mistakes all the time. Like, and this would be a painful example of like red candle, red, like that looks like death, right? That obviously looks like a top there. But as all you know is that, well, damn it, that divergence is still there, right? And if you weren't convinced there, maybe you would be here. But no, that's not what our script says. The script is telling us to stay in the trade, because there weren't enough sellers to change the trend. Ultimately, that was the takeaway. Hey, and if there is, then you know what to do. but there just was not enough negativity to change the trend. And the script kept you from making mistakes at places that are obvious where the market took a lot of people's money. Every time you see a double top set up on a current candle, it doesn't mean that it is, right? It doesn't mean that it is. In order for that to be an actual double top, price would have to retrace and break that middle channel. That would be the confirmation of a double top. So yes, price is critical. Price is really important, but so's the trend, right? The trend is your friend right to the end, but you need to know when the end is and when it starts. And that's what the script does for you. It tells you when it starts and when it stops. And it gives you usually a lot of, whoops. Yeah, I think that's the right trend. This is AMD. It's NASDAQ. You know, it took off a little while ago and everyone was like, okay, but who knew? Well, there's your buy signal. The 23rd of September. When did price take off? The 6th of October. So is this the smart money that knows something's going on that was loading up? I don't know. Is all I know, because I don't want to think about all that stuff because it does nothing but give me a headache, because it's just, most of it is is information that you can't trade, right? It's great to have a macro perspective on things, but at the end of the day, when do you buy and when do you sell? Well, there's your buy signal. Did I do the right thing? I don't know. I don't know. I just took the buy signal. Whoops. Whoa. Looks like I did. Right? The market knows. Real-time representation of what money is doing, not what people are saying. The people are saying is irrelevant. What price does and what the chart does is all that matters, at least in my world. This is why we use this thing. The most of the trouble that I think a lot of you have, because you share it with me, is because you're often using too much leverage, right, in the situations that you're in, and the trades never have an opportunity to materialize, because within, you know, the minutes or hours, they've been closed or reversed or stopped out or whatever the case. Right, so most of the problems that people have is because they're using too much leverage. Trade spot, or, you know, use 2 to 5% if you want to learn how to, you know, work the market short as well and get that ebb and flow going. But you don't have to take giant risk. Right? Like, you really don't. You're better off dropping the leverage and using a longer time frame, letting the trade materialize into a runner when it does, and then you'll be thanking me later for it. But this is an ugly market today when you see so much down, like double digits. That's bananas. So, but it is what it is, right? What can you do about it? Here's Nvidia, the stock that everybody likes to talk about. This is just a chart. It's just a ticker. Right? Don't obsess about it. Don't marry it. Don't fall in love with it. I'm pretty sure Nvidia is not sending you a birthday card or a Christmas card or, you know, asking how your kids are. Right? So why do you care? This is just a means to an end, is all it is. It's just a chart. As soon as you walk in the door and you start talking about your opinion of the GPU space, oh my God, I want to kill myself. It's just a chart. Don't worry about it. Make money. I don't care how you do it, but that's the job. Now, anyone who reads candlesticks will hate this doji on the daily. Right? But ultimately, yes, price is fading, but it's still a bullish chart. You're trading above the 20, the 50, and the 200, so, you know, yeah, at some point, going to come back and tag the 20, maybe a continuation, maybe it'll break, and if it does, where's it going to go? I already know it's going to go to the 50, just like it did here. If it breaks the 50, then what? Well, then we're into a scenario that people don't want to talk about. Because the next level down is pretty far away. The 200 MA sitting at the upper value range. Just out of curiosity, there's the 100. Right, somewhere obviously in between the 50 and the 200. But, that's not going to help it if it breaks down because you fall into this gap. So what's the downside risk for NVIDIA? Well, you continue to roll over, break support, break trend, and you find the 20. Right? That's the downside risk. You would hope that it bounces because it's the first touch, but if it does not, then you're looking at the 50. And you know this before you go into the trade, right? You've already done the downside assessment, and I always start with that. I used to look the other way first because you're always trying to hit a home run, but I found I was missing all the risk because I was too focused on the end result, but I missed a whole bunch of stuff in between. So now I focus on the downside risk first so that I make fewer mistakes and thus make better longer trades. And now I probably have a better ability to see downside opportunity, which helps me monetize the chart in both directions, right? And that's something that you'll all ultimately get to that. In the shorting part will feel like no different than making a long trade. NVIDIA on the daily, that's the downside risk. When you flip to the weekly, just because it takes a lot of the noise out, there's your 2175. And, as price and time continue to roll on here, these levels may change a touch. But the weekly is still a bullish chart, right? And you can't argue with the chart. This was the insurance. Here's our entry that blew through the 20 and the 50 all in one candle that week, and it has been nowhere but up. And if, some of you tell me this, that you feel late, right? Well, remember what we talked about early. It looks late because this is all sorted out. But while it's happening, it's not as necessarily as obvious. That's the safe entry. Now, a lot of people are going to say, oh, I feel like I missed the move. Well, first off, how the hell do you know? Because you don't know what comes after the current candle. And if you are telling yourself that you missed the move, well, that would have been pretty dumb, ultimately. Don't feel because the signal candle comes, especially over longer time frames, a couple candles after it looks like price is starting to trend, that you've missed something. Because here's an example of not missing something. And believe me, if you locked into this thing here and have been riding it up to 200 and change, you've already forgotten about these couple candles back here. Right? You've already, whether it's our ignorance or whatever it is, but we've already forgotten about the insurance that we paid and the frustration of, well, I'm late. No, you're not late. You're right on time. So just let the chart guide you. Would I be concerned that price has been riding like this for an extended period of time? Of course. Right? But the weekly stochastic RSI is not overbought. And it actually looks like, it wants to take a leg up. Well, like momentum indicator wise anyways. So this is still a bullish chart, and you can't argue with the chart. Are you going to argue with that? Come on. No. And stochastic RSI on the monthly still diverged and upward. Same with the Fisher. Same with the MACD moving average and signal line. You've only had one sell signal because of this, what happened there. And then what'd you do? You just bounced off the 20. That's it. This was what may have been a perceived nightmare, was just a test of the 20 that bounced higher. Simple. Did it give us a double toppy look here? Were people saying, oh, the monthly's double topped. The monthly's double topped. Probably some of your friends, right? No, look at. This candle that you'd be saying is double topping actually printed a buy signal, and the divergence higher was obvious. So this is just a continuation off the 20 that takes out the previous wave's high. It wasn't a double top. I don't know why everybody thinks something's a double. As soon as they see that, they think it's automatically a double top. I don't know what happens to people, but that's not it's not an automatic every time you see two equal points in price. Sometimes it's just a simple retracement. And for 5 minutes, that simple retracement may look like a double top. But that's what the next candle's for. So that we can figure that out. There's a terrible looking monthly candle. Right? Don't like the looks of that. This is Tesla. And as erratic as this thing can trade, it does trade, like, let's use a weekly, take some of the noise out. But it does have ultimately nice swings up and down, but it is kind of choppy. And it's choppy for a reason. Right? Still bullish on the weekly, but you have to be aware of what's the downside risk. And the reason I'm focusing on what's the downside risk a little bit today is because we're at a point in time where no matter what you're trading, I think you have to start to be able to identify it and look for it more frequently. So that if things do melt, whether it be quickly or slowly, you're going to be able to be looking in advance for that stuff. Like, where are those big volume gaps? Where are the draws for price to the downside? We're not saying that's exactly what's going to happen, but it's how you mitigate risk, right? If you're preparing to go long, that's fine. You want to know what your targets are to the upside, but you also need to know what the downside risk is and how you would possibly get there so that you can make sure that you protect yourself. This, you're going to say, well, double top. Everyone's going to say it's a double top. And, well, yeah, is it an equal point in price? For sure. But it's not necessarily a double top. Right now, it's just two equal points of levels of price. That's it. And if price was to fade a little bit, hey, maybe it would fade and meet it drops down and meets the 20 somewhere in here. Well, that's not a double top, boys and girls. That's just a retracement. And you might hit the 20 and then bounce and take out the previous wave's high, and then you realize, oh shit, that wasn't a double top at all. That was just a retracement. That's it. And the beat goes on. So you have to allow these things to play out, and you can be sure that there are people that might be shorting this thing now because they see these two tops, and they could be right, but there's a rationale for that trade, I'm sure. I'm just saying the downside risk is, you come back to the T line and fail it, and from there you start looking for the 20, and we know how the rules go from that point forward. Right. We'll look at Lily, because I know that we've got some people that have been playing with Lily a little bit. So I know we've been in here before to look at this stock, and it's interesting. I know we dropped a trend line on here, and it'll be kind of fun to see how this materializes, if it challenges this level again, if it breaks through. But it's had a nice, this is a relatively organized move higher. Just kind of take you from the bottom up, right? Little retracement, that's totally okay, right? Because remember, we've following the trend, letting the chart tell us what's going on from a trend perspective. Right? Basically, you get the 50 comes back into play here, you get some support, but actually you've got the real support off the lower value range. But, you know, at green candles at the 50, love those. This is why. And price spikes, you know, you start to get a little fadey up in top here where the upper value range is. Price comes back to the 20. Actually, you wick the 200, but you challenge again. And, you know, if you can break this high in here, because, you know, you've pulled back, you've retraced, and now you're moving up, taking out the previous wave's high as part of this movement. You want to be able to break through that trend line. And if you do, what do? You take out the next high up here, if you can do that. And so on and so on. And, you know, if it fails up here, where will price return to? It'll return to where it's been before. So if it was to fail, if it got to the trend line and failed, you know, it might find some support at the upper value range or come back to the 20. Just like it does on every other chart that we look at. And if you guys have any symbols, just throw them in at any time. But the way that price behaves is always the same. Right? It just might feel more volatile at different times, but it's basically doing the same thing over and over and over again. Right? And, you know, we look at, this is one thing I think the alts are famous for, right? It's when you trade these things on lower time frames, you can say to yourself, and today's a day that might be happening, is that, man, you can't seem to, it's impossible for price to go any lower. You know, you'll wake up, you'll look at the chart, you're down 8%, and you're like, wow, that's got to be the bottom, right? And then you look a few hours later, nope, it's more like 12, right? And that's what you got to love about the alts. It's just like when they start to go up or down, they go. But do they behave any differently than anything else we look at? Absolutely not. Absolutely not. The temptation I find when people trade the alts, or at least that's what my takeaway when I talk to them, is that they want to trade them off super small time frames. This chart is an example of why you want to have an eye on the slightly longer ones, because they show you the trend moves. And it's not just what price is, it's where price is on the chart. So because we use fractal analysis and we're looking at multiple time frames, you know, let's use this as our example here. Take off our prices. So here we have a move up at at the 50 MA and the 200 MA, and the next candle is red with an equal top. Right? That kind of stuff for me gets me excited, because usually that would be a short signal. And when we look at this chart, is that the first test of those levels? Yes. So, you know, you can anticipate either a pause or a failure, and you get your failure. Problem is, or not the problem, but price just melts in here. And this is, you know, being an hourly chart, like that's 9-10 hours, right, of price falling. But if you're looking at the 5-minute or 15-minute chart, you're going to be so fixated on those smaller time frames that it's going to be impossible to pick up the entry on the 1 hour or the slightly longer time frames. Why I use them is because quite often the stuff you're going to see happens at critical points, right? And those moves or the failures at those levels are usually intense, and that's why I like to trade them. Right? But if you're a little bit leveraged here and you go short, you don't need a lot. You don't need a lot of leverage for it to print for you. But allow yourself the ability to stay in that trade. And if you use too much juice, like even this green candle would probably screw you. Right? So you have to be able to manage the leverage if you're even in the direction of the right trend. So don't use too much juice. Just let these things materialize and run. Like, I like the 1 hour charts, especially for alts, because for some reason I think they give me good support and resistance levels, and then the moves that come out of them can often be quite advantageous. But this is an example of something that, well, hey, I'm already down too much. It's already down. I'm not going to be able to, monetize it much more than this. It's down 8-9%. Well, boom, now it's down 12. The reality is that you have to pay attention to this stuff, not what the number says. For all we know, this could close 20% down today. I don't know, right? But as long as you see this, that's what matters. It doesn't matter that you're already down 8%. It matters that, for whatever reason, price is continuing to fall. Don't worry about all that other stuff. Just focus on being on the right side of the trade. And once you're on the right side of the trade, allow this to guide you. Stretch out your time frames a little bit so that you're not as stressed out on the smaller ones. And allow yourself to kind of get the feel for the ebb and flow of the market. Here's gold's chart. I think we should go to the weekly, because on the weekly gold chart, we have not even hit the 20. So we've had this big, massive move higher. You get all of this support right here at the 200 MA back in 23. Boom, buy signal, and then price has gone nowhere but up. But in this run, I don't think we've had more than 2 days of red candles since the beginning of the year. That's crazy. And even with this current pullback in gold prices, you came back and you wicked the T-line and then moved higher. I realize the week's not over. I realize the month's not over. But to put some context around what's gone on, you came back and you hit the 20 once and you bounced. These two red candles have not changed trend. So we're still bullish until the chart tells us that we're not, right? But we're still bullish. And when you look at the monthly, it's even more obvious. Kind of looks like the Bitcoin monthly chart that just kind of went straight up. But even here, there's no more going back to February of 23. There's no more than 2 consecutive months that you had red candles. There's nothing, and I guess the takeaway is there's nothing that you need to be worrying about when you're in trades like this. But yet we get sucked into other people's tornadoes. Maybe out of entertainment, maybe out of whatever, listening to all kinds of stuff about economics, the way of the world, this, that, and the other thing, what's going to happen here, there, and everywhere. And it's all just noise. It's all just noise. I'm sorry, but it is. It's just noise. There's only one thing on the monthly oil chart that hasn't been hit. And that's that. Now, we showed you on the daily chart, if you were to break certain levels, where price would go. Showed you on the weekly chart what that looked like and how you would get to those levels. This is the monthly chart. Now, we know what it means when there's divergence between the T-line and the 5 EMA. What does it mean? It means you're in a friggin' downtrend. It means that these 3 candles, these 3 months, this quarter of positive price meant nothing because it didn't change trend. And there's a lot of smart people going back all the way to 2023 telling you that oil's going to be $100 a barrel. We're saying, nah, we kind of see, if this was to happen, we see you going in the opposite direction. Now, fractally on the monthly chart, the only thing left to tag is this level. The 1,000 doesn't show because there's just not enough data. This is the only thing that remains. We've tagged everything on the daily. We've tagged everything on the weekly. This is the only thing left on the monthly chart while we have this divergence to the downside. Oh, but that's crazy. That sounds like That's too far. There's no way. Never. That's insane. Really? Well, we did it here. Well, that's so what? That's one time. Oh, well, what about back here? Okay, so 2 times, no big deal. What about back here? Right? We can go on and on and on. This is not a new phenomenon. We've done this many times before. And when it hit $25 back in 1999, it sounded just as batshit crazy as it does $61.66 in 2025. The chart doesn't care. Right? This is the language of the market. It's current price revisiting past. It's breaking one level and finding the next. And its prices being attracted to levels that we can see being represented by various different things. It's simply a language. Math is a language. This is a derivative of mathematics, so it's a language unto itself. And it's just telling us what it's doing. It's up to us to try and figure out what it's saying, and that's kind of what we're doing here. And we can do it over various time frames. That's it. Whatever you're looking at in the here and now, look, is there any value on this candle having a conversation about $250,000 Bitcoin or whatever it is today that people are saying? Is there any value in having that conversation? No. Is there any value in talking about what MicroStrategies did that day? No. Is there any value in knowing what Michael Saylor had for lunch? No. No one gives a shit. The only thing that matters is what's on the friggin' chart. There's a buy signal. Buy it. There's a sell signal. Sell it. What else do you need to know? What value of knowing what Michael Saylor had for lunch on the week of the 21st of April? No one cares. Nor do I care what MicroStrategies did that day or anybody else for that matter. Because the only thing that matters is the trend and the direction of price and whether or not you're on the right side of it. Everything else is a moot point. And if you're having a conversation about what it feels like to be on the wrong side of something, then you have to go back to school. The market's telling us what it wants to do. Why it wants to do it, who cares? What value is of the why? Oh, why is price going up today? Because it shouldn't, because this is happening. Oh my God, stop. Just stop. Do you know to stop at a red light when it's red? Then just friggin' do it. Do you know to step on the gas when it's green? Then do that. But if you're confused at what to do at that intersection because you see colors, then, oh my God, maybe you shouldn't do this anymore. Seriously. Just do what you're told. Don't get sucked into someone else's tornado. Don't get sucked into a narrative. Don't get sucked into group speak. Be indifferent to what other people have for lunch or what they say, whether it's someone in the crypto space or a CEO. I had a boss one time that told me something I'll never forget. There's 2 types of people in this world, lion tamers and lion bastards. And how many lion tamers have you met lately? That's why I read charts. Because everything I need to know is on that chart. What people say sounds nice. Maybe it's true. Interesting story. But at the end of the day, it's what the chart says that matters. Nothing else. And if you bump into a lion tamer, please tell me. Because I'd love to meet one. Those are the people that pollute this space. Right? No one's going to look out for you better than you. But you can't do that if you're blind. You can't do that without any basis or structure around what you're doing. This is an ugly chart. We said it was ugly up here. These moves are just retracements in a further downtrend. Right? That's all this is. And what did we say we had to be fearful of on the daily? It's coming back to the 200. And when we got there, remember we talked about this, I think on Tuesday. If we come back to the 200, this isn't the first test anymore. This is the second test, and we're more inclined to do what? Fail. And here we are. No crystal ball. No one's making a prediction or anything like that. All this is having an understanding of how price behaves. Been in here long enough to see this time and time and time again. And we said that if we fail the 200, which is in and around where the point of control is, the next level down is the lower value range, which falls in. Remember we pointed out this gap earlier in the week? Well, here we are in it, and price is moving through it real damn fast. And the concern would be what? Well, we know that everything north and south of the point of control usually has gaps associated to it. Well, to the downside, they're quite clear, right? This is the one we pointed out before. But if you get in here, right? So if we fail, we talked about this, you're going to come back and take out the previous wave's low. But if you take that out, then what? Well, you start looking to the left to look for other areas of past price. So let's just, what do we got here? 100,009. Well, let's add a little context to this chart. Let's add a 20 in. I'm pretty sure we failed that. Right, so we failed the 20. So we failed one level, we're looking for the next. Uh-oh. We've already done that. Everything of relevance for support and resistance is on this chart. This is actually quite interesting to get a look at this. So we know that major moving averages are representations of time and price, and where buyers, buyers and sellers have shaken hands in the past, and we know that they're typically support levels or resistance levels, along with those benches of past price or liquidity zones or fair value, whatever the hell you want to call them. When you start trading below all of that, so we're trading below the 20, below the 50, below the 200, even the 100, right? Like we've failed it all. Is that positive or negative? Is that bullish or bearish? It's a little on the bearish side. And because we've gone parabolic in price, what happens when you do that? You spread out all of your ranges. You don't really think about it when it's happening. It's all you're excited about price going higher. That's all you can think about. Well, while that's happening, all your ranges that you have to come back and check, they also spread out, right? So, you pull back. When you fail this, the 20, like the 50 and the 100, you got to start looking to the 200 right away, because there's really not much left there. If you fail this, like now we're getting a little to the sketchy side. So what do we do, right? How do we kind of, again, put context around this chart? Let's change some time frames. And I'm just kind of working through this just as I would any other chart with you guys. So I flip to the weekly. A little more organized on the weekly, right? So you've had nice moves higher, retracements that got support. Love the support off the 50. Move up, you take out the previous wave's high on the way. Great. Another retracement. Seems to be attracted to the 50. Boom. Another leg up, take out the previous wave's high. And here we are, breaking what now this, which was acting as support in here, is now resistance, and the 50 we're yet to find. But chances are, if this melt continues, you will, and that brings you to 103, almost 103 even. Where's 103 on the daily? Right in here. So this wick, in and around this wick, that's 103. So this is the 50 on the day, on the weekly, roughly 103. Which, do you remember how I tell you I like to line up points of the T line, if I can, or the 5 EMA? What's that? 103.9? I'll take it. That's close enough. So I'm pretty sure we're going to find that level. Let's just take it up to 103 even. Anyways, that's close enough, guys. So I don't like this at all. So what's a draw for price? You got the lower value range. This is the range that's acceptable for price. The chart's telling you that. Right? So we're obviously coming back to an acceptable level. But I think, this is feeling really heavy. Let's look at the weekly. Again, there's our level right there. That's our support. You don't want to break that, because then you're going to start looking for what? Benches of past price, structural levels, major moving averages, things like that. Anywhere you can kind of line up these areas of past price that makes sense. But this is a real nice example on a weekly chart of fanning out all of your ranges that end up getting tagged. Do you remember? So looking at the weekly oil chart when it was like $90 and knowing that everything underneath it could potentially get tagged, right? So, wow, okay, in the event of a downtrend, if I fail the 20, I'll find the next level at the 50. And if I fail that, down. And if I fail that, and it's kind of like an if-then-this kind of scenario. Right? I'm not saying that we're going all the way down here or anything. Is all I'm saying is that this is kind of how a breakdown begins. And these are the levels that it will look for on the way down until enough money comes back in to change that. What you would look for here is, does that happen at the 50? Does it turn out to be just a continuation like these were? That's highly possible. Now, if it breaks it, however, you don't panic because you understand what's happening. Right? You're like, okay, I broke the 20. I'm probably going to come back to the 50. Well, here I am. Now what happens? If you bounce, then, the beat goes on. But if you fail, you're like, okay, failed to 50, probably going to find the next level. Until enough money comes in to change that. And then it's just, repeat play in the other direction. Be indifferent to price. Because if you're indifferent to price, it makes the emotional part of price going up and down a little easier to take. I know it's an easy say and a hard do, but it's just, once you wire yourself for it, you're fine. You'll never be able to feel anything again. So just when price starts to fall, you're like, okay, how can I monetize this? If price starts to rise, how can I monetize this? That's all. Right? It's as simple or as complicated as that. And it's just finding a chart that you're comfortable with, that has, a nice ebb and flow of price. I have, there's a handful of things that I chart and trade, and I'm pretty knowledgeable of what they look like on all time frames. So there's really nothing that ever gets away from you, right? You're pretty much on everything that you need to be on. Solana is something that does have some, nice swings. I know there's some people in here that like to trade it. But again, do I want to make it super complicated for myself? No. Like I'll just take, signal trade, right? That's all I have to do. And trade in and out of these volume gaps. The lower and upper value ranges will frame in price for you. And then it's just, okay, short, long, short, long. That's all. And if you're working off longer time frames, you're not going to feel like you're erratic or chasing your tail, right? This is a 4-hour chart that you'd probably be in for a couple days. Right? Unlike the 5 minutes that you're trading where, you're in and out of 12 things in 1 hour, right? Like that's kind of not what we want you to do. Just find something that you like to trade with nice price action and trade it. If you want to be an investor and you want to invest in something, I don't know, let's pick Google because it's there. Let's go to a daily chart. Would having the ability to look at a weekly chart, a long-term chart, and go, yeah, maybe I'll buy some calls, some long-dated option calls on Google. Got a weekly signal. Looks like price wants to go higher. If it does and it takes out this previous wave, hey, that puts me at least 207 rather, and can see where it goes. If that's all you do, or just buy commons. Like you've almost doubled your money just buying commons. If all you did was buy that signal. So you don't have to be a trader to utilize this. Like the worst thing for investors is buying at the wrong times. Having money sitting in your account waiting for a right opportunity, maybe earning a little bit, is better than making a mistake. What's the question we're asked all the time? When do I buy and when do I sell? It's the age-old question. Right? If you go back to 2022, right? This is even a better example of a bull run higher. What's the narrative of all as this is taking place? Does anyone remember? Pretty much Google can't do any wrong. Chart go up, money, price go up, fine, I'm in, right? It's the Mag 7 mentality. But when do you buy and when do you sell? What's your fear when you go into a car dealership and you're going to buy a car? The number one fear is what? Paying too much. That's your fear. Why is that not your fear when you buy stock? Can someone explain that to me? You shit your pants when you go buy a car, but yet you'll spend 5 times the money on investing in a stock and not care about where you buy it. What the hell is that? Right? That makes no sense to me whatsoever. So that same guy or same person who bought at 150 or 145. This thing goes nowhere but up. Stocks don't go down. It's Google. Right? I'm buying. You buy at 150. Boom. All the way down to 88 bucks or less. 86. Do you feel smart now? Are you pretty sure you got the best deal on your car, buddy? You convinced of that? I wouldn't be so sure. I have a feeling you probably paid too much for your car, too. Because you don't know what you're doing. Yeah, you call yourself an investor. But you just throw money at anything, anywhere? No, you have to learn how to read price on a chart. And nobody wants to buy at a top. Right? Wait for a bloody retracement. Well, when's that? Well, the chart will tell you. Well, how far is it going to go? Well, the chart will tell you that too. Wealthy people have one thing in common: patience, in many cases. Because They don't do dumb stuff, right? I used to get teased when I was taking these courses on how to trade and how to learn how to read price on a chart. They say, oh, would you learn how to, buy low, sell high? No, dude, I learned where the high was and where the low was. How about you? Or are you the guy buying at $150 because you're smart? Shut up. Shut up. This doesn't matter if you're trading or you're investing. You have to understand where price is on a chart. Because if you don't, you're going to make a mistake. You are going to burn money. You will do something wrong. It's just how it goes. Bullish chart on the daily? Yep. Do I like this candle? Nope. But it's still a bullish chart. But you have to understand where on the chart you're buying something. And let me give you an example. If you're trading the stock market and someone says to you, you're listening to the news at the end of the day, and someone says, the market was up today. It closed at 6,144, an all-time high. I got to see that on a chart. That number doesn't mean anything to me. I have to see where that 6,100 is on a chart. Because what I see is a resistance level that doesn't seem to want to be taken. So that 6,100 sounds great. The market was up a couple $100 or 50 points that day, whatever the SPX was. That's great. I guess that's news. But I got to see it on the chart, because what I see is price at resistance. That's what I see. And how far is it going to go down? Like, again, do you want to buy at 62 here? Or maybe do you want to wait for a retrace? Like, if you're looking at this chart, you're saying, I don't know, man, like, it looks a little toppy. Why don't you see what happens when it comes back to the 20 or the 50 or something like that, right? See what it wants to do. Maybe it'll, bounce and carry on from there. It didn't actually bounce at all. It just went straight down. Right? And where's it going to go? We don't know. We just wait the chart tell us. But what we do know is that as long as we see this stuff, we are in a downtrend, and we don't want to get in the way of that, and we don't want to long that. That's not how we monetize that part of the chart. You monetize this chart by being short. Simple, right? That's the job. Monetize the chart. Don't fight the trend. Great, thanks for telling me. How do I determine whether or not I'm on the right side of the trend? Well, we show you that too. Right? We're not saying, do this or do that without showing you how that actually happens. Right? So, here we are again. You're at an all-time high. Do you want to be the guy buying up here? I don't. Right? I don't. Is it a bullish chart? Yes, but kind of scary all at the same time. You guys have any tickers you want to look at or any other symbols? Anyone?
Hey, what's up, Blind? How's it going?
Hey, Rico.
Yeah, I wanted to check out. I had a buddy of mine ask me yesterday, and then
Yep.
I have a couple of investors that are from Australia, and they've been talking about H bar quite a bit. And then I think we're at the point, and we've been kind of talking about it for a while. You kind of started this whole conversation, and then we're seeing it kind of evolve. But we want to start to almost look for like our privacy coins that we're gonna want, because I'm just seeing more and more news about this.
Yeah.
So one was H bar that I wanted to check out, and then any privacy coin that you think people are sleeping on, for people to possibly find something at a good price right now.
Yeah. So the chart you're looking at is H bar, and it looks like a lot of the others, right, where it's pulled back after that big dump and retraced. But where's it finding resistance? Right at the 20 or the 50 and the 200.
And the 200. Yeah.
So it kind of reminds me of last week's oil chart. to be honest, like challenging the 50 for the first time and failing. So let's see what happens here. It's still a bullish chart, right? You're still diverged upward. You're getting a little bit of support from that lower value range and the 5 EMA, but you can see where the range is, right? If it goes sideways, to me, that's actually bullish when it goes sideways along these levels. If it starts to break down, well, the 20's there, and that would be your next level down.
Right. Yeah, he was happy. He was like, he texted because I talked to him like 4 days ago, and he's an XRP guy that I met through my brother when I went to my brother's wedding, and he was like, man, I need to find something else. He was like, I was looking at HBAR, and then it was funny enough because like right when he had hit me up, I went to go check the daily chart, and HBAR was printing a buy signal. So I was like, if you wanted to get into it right now, it is, like I told him, trading into some levels of resistance, but this is where you could feel good about a trade because it's actually, doing it off a buy signal, So
yeah,
it was like a couple of days past. He was like, "You're right. It's doing good." I was like, "I wasn't right. We got a buy signal. We're just following that thing, and we'll go from there and see what happens next."
And the best part is though is that you get a chance to kind of get the ebb and flow, right, of the market. So yeah, you catch that as a little bit of a long, knowing that resistance is there, and you're going to be looking for it, and you're going to say, "Hey, I'll take the long. It might be an opportunity to short." And you'll be at the right place at the right time. Right? And when it does, if that does materialize, okay, failed breakout, you're going to come down and look for the previous wave's low. Yes. Okay, there's our weekly. So
Nice.
yeah, there's this big wick that literally just kisses the 50 and the 20 weekly and then pulls back. So this is a real good example of why we do fractals, right? So we see something on the daily and we're like, okay, I get it, but let's look at the weekly chart. So here's the big dump. This thing told us 2 weeks before that to short or to exit. 2 weeks later we have this big move down. The retracement candles, or those, these two green things, are not changing trend on the weekly.
Right, they're not.
So that's a little bit concerning, right? It would take a lot to pull this up over here, and it looks like it doesn't want to do it. So again,
and HBAR doesn't have that type of like momentum, anyways. But he's a Robinhood trader. He wanted to just be able to hold something else other than XRP.
Mm-hmm.
He's not trading a daily basis. He's just like, I said, man, if you like XRP, like you might want to start to accumulate HBAR and maybe XLM and start looking at some privacy coins and stuff. And it might be a good thing because he's been holding XRP for a while since like under $2.
Yeah.
So.
Well, there's, I like that privacy coin space. I think it was kind of ignored while all this other ISO stuff was going on. But if you look at Pirate Chain, like it's probably the only thing green today. That's the weekly. Here's the daily. And I don't know a lot about Pirate Chain. I believe it's privacy by default, though. But again, like, look at the consolidation. And, you start to get a heartbeat, and this thing just took right off. It's come back, and it's kissed the 20 MA on the daily, and then just continues. Right, so another example of, is this going to be a double top or something? No, it's a continuation. Now, is it super hot and, when it pulls back, are the levels obvious? Yeah, sure. Right, but this is, again, like, do you want to be buying this at 63 cents? Or do you want to wait for, at the very least, a respectable retrace on the daily? Like that, to me, sounds like the most rational thing to do, but there are people that are going to be like, nope, I'm going to buy up here. I'm never going to see prices this low again. You just won't. Like that's what you hear. Well, without an understanding of how the market moves. You'll come back and you'll find areas of past price that you'll gravitate to. But, this thing is still relatively inexpensive. in comparison to some others, but nice move up. Zcash, another one. We talked about this a little bit earlier, like just this massive consolidation and then it explodes. The T line and the 5 EMA have been so diverged that they haven't even printed any sort of a sell signal, not even on these big red candles. So obviously, still a bullish chart. There's your weekly. You don't like the weekly candle, but it's still a bullish chart. And look, you could come back to the 5 EMA or the T line, and I would still say it's a bullish chart, right? It's until it breaks that kind of trend. So, but this is what happens when things go parabolic. I don't think Zcash is privacy by default. Firo, another one. That's a privacy coin. Again, relatively inexpensive still. Green candle right at the 50. Signal there as well. Big move up. Market pushed it right back down to the 20. Again, is this a double top? Well, we're going to find out, right? This one looks more likely. It's got to pull back past here, though, but we'll see. We haven't printed a sell signal yet. But Firo's another. And then there's Xano, which I like this. So like if Monero was a blockchain, it would kind of be like this. It'd be like Xano, but actually Xano has more security even than Monero. And everything is privacy by default and anonymous. And I don't know. Do you guys think that's a big ask? Like, I really don't. The public ledger thing, I get to a point, but like I've said before, I don't go to the grocery store and open up my wallet just so the cashier can see how much cash I have in it before I pay for my groceries. So it's, I don't get it. But anyways, this is a privacy blockchain. Everything is anonymous. There's even a stable coin on the Xano blockchain called Freedom Dollar, I think, but it's not collateralized with treasuries. It's basically the smart contract over collateralizes it with Xano to keep it at $1. So there's some cool stuff that goes on there too. But I think these privacy things are going to continue to have their day. I'm not sure if there's any. What else? Does anyone know of any others? I know there's quite a few. Dash, maybe?
Also, I got to head out in a second. I got a little meeting that I got set up. But Blunt, I appreciate you. Delatoshi, good to see you. Can't wait to beat you in chess. And Blunt, check your messages on Telegram. I mean, on TradingView.
I did, and I think I gave, you've got access.
Oh, okay. All right,
yeah,
cool.
Check it out. You should be in your panel.
All right, you guys have a good day. I'll talk to you guys later on.
You bet. Thanks, Rigo.
Yeah, no problem. Thank you.
Yeah, there's another privacy coin. I think it's called Dash. It may have been called something else at some time, but nevertheless, had a big move up, and all these big moves they do get retraced at some point in time or another. Right? All this big parabolic movement in here creates what? Volume gaps. Right? It's these volume gaps that are created that you can use. Literally, I will trade in and out of these volume gaps. And I like them because price moves up or down with velocity. Because there's nothing in there to hold price back up or down. They're just filled with fairy dust and air. So keep an eye on the volume gaps. They're literally printing you money. So. But any other tickers you guys want to look at, or any questions you have? If not, we'll wrap this one up until Tuesday of next week. And of course, I think I might actually be doing some live stuff on YouTube in the next couple days as well. But we can wrap this one up if there's no other questions. B&B, failing the 50. All these are the things that you don't want to happen. There was your signal a couple days ago. And now we're failing. All right, guys. Well, if there's nothing else, we will pack this up for today. I appreciate all of you coming in. I thank you for your time, and I look forward to doing